What's the likelihood of bringing these refiners back into action, and how much would that help global supplies?
Bringing the U.S. refineries back would be a big jump for gasoline supplies in the U.S. You have this issue in the U.S. where it's not so much the crude oil supply that's boosting the price of gasoline in the U.S. It's the supply to refine it, the ability to turn it into gasoline, and because of those supply restraints, you've seen this giant jump in essentially the price at the pump for the folks at home, and that's weighing on Biden. That's weighing on the U.S. government. And over the weekend, we had the U.S. Energy Secretary say that there's continued upward pull on demand and the likelihood of sustained high gasoline prices. So that's something that's going to be looked at very closely. Meanwhile, China has this massive, almost the opposite problem. They have a giant contraction in Japan because there's this essentially the COVID zero policies cut consumption in that country. So it's almost a tale of two different markets when you look at those two countries, and they're huge markets, and it's challenging for traders to understand where oil prices should go from here because it's to weigh both of those factors.
We heard from the U.S. Energy Secretary really talking about the continued upward pull on demand and how likely that gasoline prices will stay high. What is the market expectation in terms of beyond the summer season, and what will they be looking for in terms of the central bank guidance and the way forward?
Well, I think you look at just that giant drop last week. We had this huge fall because essentially you had the Fed signaling a more hawkish move forward. So it's really going to be, is Powell going to double down on his determination to cut inflation and with aggressive rate hikes? And if he does, that could, raising the interest rates would essentially clamp down and push down oil prices going forward. That's what they're going to be watching closely.